we have raised 2030 oil demand forecast to 108.5 million barrel per day from 106 million barrel per day before. And as you mentioned, we do expect the peak about a decade away in 2034 and a plateau thereafter. The driver for the upward revision in our oil demand forecast is we have enhanced our proprietary road model to more accurately capture the impact of the non-linearity in the oil demand to the GDP growth pattern. Let me elaborate that more. It is commonly assumed that every dollar increase in income growth leads to a fixed amount of oil demand increase. However, when you look at it on a longer-term perspective, we have analyzed the developed markets' oil demand consumption pattern in the last few decades, and we noticed there is a S-curve relationship between income growth and oil demand growth, which means when GDP per capita hits a certain level, there is a acceleration in the oil demand growth in those countries from our analysis. In other words, think about it like a ladder of spending. When we are at $2,000 to $3,000 GDP per capita, we are maximizing consumption of staples, certain metals. As we go more wealthier, we want to consume more white goods and appliances that is made of petrochemical, predominantly made of oil. We go more wealthier, we want to consume cars, or traveling demand increases over time. So generally, there is an acceleration phase in the income growth seen in the developed market pattern of oil consumption. We think this relationship is important to think from EM perspective, emerging markets like India, which will go through an acceleration phase of demand over the coming decade.
There has been a visible stagnation in electric vehicle sales in the last few months. To what extent does that raise the possibility of a slower than anticipated EV adoption scenario into the 2030s? And what would that mean for oil and gasoline demand trajectory?
Sure. So our base case remains bullish on EV penetration growth. And we see the current slowdown as more cyclical in nature. Globally, we have seen nearly 10 million EV cars sold last year. We expect this number to more than triple to over 30 million cars EV sold in 2030 in our base case. But as you mentioned, there has been a stagnation in the EV penetration growth this year. Plus, policy risks are there with the election coming in the big regions like US and Europe. And as such, possibility of a slower EV adoption scenario has become top of mind for investors. If we were to run a more bear case scenario, which means EV sales won't triple by 2030, but more like double to 24% EV penetration rate, it implies there is no peak in oil demand through 2040 from our road model. And the oil demand keeps rising to 113 million barrel per day by 2030. What does it mean for gasoline? The peak in gasoline in a slow EV adoption scenario dips from 2028 to mid-2030s.